Hey everyone! So, if the term input tax credit kind of makes your head spin, or you're just trying to lock down the difference between CGST and IGST for your exam, you are in exactly the right spot. We are going to crack the code on GST together and turn all that confusing stuff into knowledge that's going to help you ace your test. Let's just dive right in.
Okay, so here's our game plan. First, we're going to take a quick trip back in time to what I call the old tax maze to see exactly why we needed GST in the first place. Then we'll follow a simple t-shirt on its journey to see how the new system works in the real world. After that, we'll unlock the single most important concept, input tax credit, before we cover the must-know rules. And we'll wrap it all up with some key distinctions that, let's be honest, are almost guaranteed to be on your exam.
So before we can really appreciate the solution, we've got to understand the problem. So let's start with a really basic question. Why was the old tax system in India, well, such a mess? I mean, really think about that for a second. Why would a simple product get more and more expensive at every single stage of its journey? You know, from the factory to the wholesaler to the little shop down the street, the price just kept climbing. And it wasn't just about profit. It was a massive flaw baked right into the tax system itself. The big, hairy monster in the room was something called the cascading effect. And it's exactly what it sounds like, a tax on a tax. Just imagine a wholesaler buys something and pays tax on it. They add that tax to their cost. Then when they sell it to a retailer, the retailer gets taxed on a price that already has that first tax included. It was this crazy waterfall of taxes that just kept flowing down the chain, making the final product way more expensive for you and me. And that brings us to the game-changing solution that was rolled out in 2017, the goods and services tax. Its number one job? To completely destroy that cascading effect and create one single, streamlined tax system for the whole country. And honestly, this slide says it all. On the left, you've got the old way of doing things, just a tangled web of different central taxes, state taxes, a total headache. And on the right, you've got GST, which acts like a giant funnel, channeling everything into one unified structure. The goal was huge, but simple. Make India one single market. So how does this whole one tax thing actually work in practice? Well, it all depends on where the sale is happening. As you can see right here in the table, if a sale happens within the borders of a single state, say from Mumbai to Pune in Maharashtra, the tax gets split into two. You've got central GST, or CGST, that goes to the central government, and state GST, SGST, that goes to the state. But if that sale crosses a state line, like from Delhi down to Mumbai, it's just one single tax, integrated GST, or IGST. This is a super important distinction you've got to know.
All right, theory is one thing, but to really, truly get this, we need to see it in action. So let's follow a regular t-shirt on its journey from the factory all the way to a customer. Okay, we're going to track this t-shirt from the moment it's made to the moment it's sold in a store. And as we do this, I want you to pay really close attention to how the tax is collected at each step, because you're about to see the secret weapon that stops that whole tax on tax problem dead in its tracks. So look at this supply chain. At every single step, from the manufacturer to the wholesaler and from the wholesaler to the retailer, GST is being charged on the sale. But here's the really clever part. None of these businesses are actually going to pay the full tax they collect to the government. They all get to use this incredibly powerful tool called input tax credit. And that brings us to it, the single most important concept in all of GST. Seriously, if you understand one thing for your exam, make it this: input tax credit, or ITC. This is the absolute heart of the entire system. This right here is the mechanism that killed the cascading effect. To put it really simply, ITC means you get to subtract the GST you paid when you bought your supplies from the GST you collected when you sold your stuff. You only have to pay the government the difference. That's it. Okay, let's zoom in on that final step, the retailer. So they sell the t-shirt to you for 500 rupees and they collect 25 rupees in GST. That 25 rupees is what we call their output tax. But they don't just write a check for 25 rupees to the government. First, they get a little discount. First, they get to claim their credit. You remember when they bought the t-shirt from the wholesaler for 300 rupees? Well, they paid 15 rupees in GST on that purchase. That's their input tax. So now they get to subtract that amount. So what's left? Their net tax payable is just 10 rupees. They collected 25, used their 15 rupee credit, and only have to pay the 10 rupee difference. And here's the beautiful part. That 10 rupee tax is exactly 5% of the 200 rupees of value that the retailer added. The tax is only on the value add at each stage. That is the core principle of GST.
But hold on. Claiming ITC isn't a free-for-all. You have to meet a few really important conditions, and this is a classic exam question. As you can see, you have to be a registered business, you absolutely need a proper tax invoice, you have to have actually received the goods, and this one is critical. The person who sold it to you has to have actually paid their share of the tax to the government. The whole chain has to be clean.
Okay, now that we've totally mastered ITC, let's get into the practical side of things. The rules, the registration, and the returns that make this whole system tick. So not every single person who sells something needs to register for GST. The law is pretty specific about who has to get in the system. So who exactly needs to get themselves a GST identification number or a GST-IN?
Okay, here are the main triggers. The big one for most people is annual turnover. 40 lakh rupees if you're selling goods, and 20 lakh if you're selling services. But, and this is a huge but that you need to remember, some rules have nothing to do with turnover. If you sell goods to another state, or you sell through a platform like Amazon or Flipkart, you have to register, even if your turnover is tiny. It's all about making sure that tax trail is crystal clear.
So, if ITC is the heart of GST, then the tax invoice is the key that unlocks it. You can think of it like the golden ticket. Without a valid, proper tax invoice for a purchase you made, you simply cannot claim input tax credit. It's that simple. No invoice, no credit. It is the single most important piece of paper in this whole system.
All right, let's wrap this up with a couple of key comparisons. These are ideas that often get mixed up, but they're perfect for testing if you really understand the concepts on an exam.
Okay, this is a fantastic distinction you need to know. First, a composite supply is a natural bundle. Think about buying a new TV. The installation and the warranty are just naturally part of the deal, right? The whole package gets taxed at the rate of the main thing, the principal item, which is the TV. Now, a mixed supply is an artificial bundle, like a gift basket with some chocolates, a book, and maybe some juice. In that case, the rule is easy. The entire basket gets taxed at the rate of whatever item in there has the highest tax rate.
And here's one more key document comparison for you. On one hand, you've got a tax invoice, which lets the buyer claim ITC. But on the other hand, you have a bill of supply. You'll get one of these if the seller is a very small business using the simplified composition scheme, or if they're selling something that's tax exempt. The absolute critical takeaway for your exam is this. If you get a bill of supply, you cannot claim any input tax credit on that purchase. Period.
And that's our deep dive into GST. From the old cascading effect to the power of ITC, you now have the core concepts you absolutely need. The whole point of this system was to simplify a crazy web of taxes. So as you study, keep asking yourself that final question on the screen. What's working and what are the challenges that still exist? Connecting these rules to the real world is the real key to mastering them. Thanks so much for joining me on this explainer, and good luck on your exam.